Money Radio, discussing the business of making and spending money.
That brings you the happenings in the Nigerian economy. My name is Case Hammond. I am in the studio with my colleague, Mr. Anthony Uko. You're welcome.
Thank you.
Yeah. Today we are discussing how the death of foreign exchange is impacting the Nigerian economy. And okay, so you cover that bit. You have knowledge, and I promise to our listeners that we'll do justice to this topic today. So, listeners, you're welcome. It was around the month of July that the Central Bank of Nigeria, the CBN, announced that they were banning the sale of foreign exchange to bureau de change.
Yeah.
Mm-hmm. And because of alleged abuse that those bureau de change operators were carrying out. And the CBN also ordered the commercial banks sell foreign exchange to those people who deserve it. Manufacturers, people who want to pay school fees, people who want to go on medical tourism, and the like. Sell to them. And that was with the hope that they will provide enough foreign exchange. And even up to today, the bank says they are providing enough foreign exchange. I was listening to the CBN governor just this morning on the television, and he said that for those people who need more foreign exchange, it is available. Just prove that you need it for this so and so reason, and you can get your case across, and we will give you foreign exchange. But as we speak, the foreign exchange, the naira is on a consistent downward spiral, going down. And according to what the report we see here on Leadership Friday, that says, manufacturers under pressure as naira falls to 570 naira to the dollar. So there is a consistent downward spiral, and we will discuss this today. So, sir, what do you think is the problem? What is happening?
Well, I would say the central bank came up with this policy to get the bureau de change out of selling the dollar to bureau de change. Like this CBN governor said, that Nigeria is the only country where the central bank sells dollars or any other foreign currency, for that matter, to the bureau de change. So the BDCs, they have to source their own foreign exchange from people who come to sell to them. It's a play out of demand meeting supply. They buy people who have maybe remittances from abroad and all those stuff, exchanging it with them, and then they have it to be able to sell to small people who want. And like the CBN pointed out, that they were not supposed to exceed, like, say, $5,000 a month. But prior to now, the CBN had been selling about $20,000 to each of the BDCs, and
Per month?
per week.
Per week? All right.
Yes, and we have over 5,000 duly registered BDCs, and every month the CBN said it was receiving up to 5,000 applications of people who wanted to register new
bureau de change.
yes
That means the
new
business is a very
yes
profitable one.
so it means the business has been very profitable. They get to buy dollars from the CBN at the official rate, and the idea there was that they will be able to sell this dollar at the rates, within the rates that is acceptable, and then keep the naira depreciation down. So the CBN in the first instance selling dollars to the BDCs was to stabilize the currency, to stabilize the naira by making the dollar available.
Yeah.
But that aim was clearly defeated. So we saw the CBN taking a rash, coming in proactively to check that abuse and that. But of course, we have seen the effects.
So these people must be making a kill if they are getting this from any source that is, say, official. Because if the CBN is selling at, say, 411, and these guys are selling 570, that is 159.
No, but at that point, it was not up to.
I know it wasn't, but
so
I'm saying just in case
it was
they are
not
getting
even up to 500 at that point. But even if it was at 500 or even 450, they were making a kill because there was the opportunity for arbitrage.
Yeah.
In that they will get it. At that point, it was 300 and it wasn't up to 400 to the dollar at the official rate before the CBN collapsed the CBN rate and adopted the investors and exporters window, which is around 411 naira to the dollar as we speak. So even if they were getting it at that 411 naira to the dollar, and they were selling it close to 500 naira, that's over 50 naira, close to 100 naira difference that they were making.
Yes.
So that's why we saw the spike in the number of people who wanted to register BDCs, in addition to the over 5,000 that we had on ground. So of course, we would say that the CBN, in making its decision to plow that road, was equally justified. But we are looking at the implication of what this policy has done.
Now as you are explaining this, it gives me I am having a little understanding now why the CBN's allegation is justified when they said that these people were abusing. It's possible that some criminals were even coming into.
Of course, the issue of money laundering, using it to launder funds, also came in because the BDCs were handling so much foreign exchange than they were originally set up to handle. So it was a good conduit for money laundering of funds into the country or out or anywhere as me.
Now this thing is a scare. It's a scare because according to this story, it said the naira rose to 570 naira to the dollar at the parallel market yesterday. We're talking about Friday, amidst increasing demand and activities of speculators. It says some analysts said if the current situation persists, the currency may drop to as low as 700 naira to the dollar before the end of September. I'm afraid what I'm saying may give rise to some speculation. I don't mean to say, but for the purpose of analysis, let's talk about it. It's a scare to manufacturers. It has implications. Much of what our manufacturers use are imported. So it has implications on the wider economy. Whenever a little in one corner of the economy, one aspect of the economy, or one sector of the economy is affected in one way or the other, it has this,
Rippling effect.
yes, it ripples and it affects the wider economy. So take an example, for example, it the more expensive it becomes to get foreign exchange.
Yeah.
Manufacturers, of course, will put the costs into manufacturing, and then the final consumer will be the one to bear the brunt, and that is the wider economy, which has inflation implication.
Yes, I would say that because the BDCs have operated for a long time, so it was easier for a lot of people to access their foreign exchange demands from the BDCs. Because going through the banks, there are so many documentation, there are so many processes, and not everybody is an eligible customer.
Yes, let's come to that.
Okay.
N- the average Nigerian is not patient.
Well,
So I'm not in that, but we tend to be impatient. So a transaction that may take maybe 30 minutes, I'm sorry, 30 seconds or 1 minute with a BDC operator may take days
yes.
going through
Documentation, going through approvals, going through ensuring that you have all the requirements. And of course, there are lists. There are things that are eligible for foreign exchange. For the importers, there are items that they cannot are not allowed to be imported. So you cannot access foreign exchange for it from the banks. And then for manufacturers, there are some level of restriction as well to what they can access foreign exchange from the official window to do. And so these are some of the issues. But you know that when there's a debt, the debt of foreign currency within the system, it will affect even the eligible people as well. So that is what we are seeing here, and it's having a spiral effect. The manufacturers said they are not able to access foreign exchange. They are not able to import the raw materials they need for their production, and they are importing it at higher cost than before now, even with the um, devaluation of the naira before even this depreciation that we are seeing right now. So with all of this put together, it has affected their operations. Their operating costs have risen, and they are producing goods that are more expensive compared to the ones that are imported. And then those who are producing for export, they are not producing competitively enough. So you can't produce at such high cost, and you want to compete
with
with
a country,
countries that are producing at lower cost than you.
especially so now that we are getting deeper into the aftermarket. Aftermarket is because that's the African Continental Free Trade Agreement.
Yeah.
It's becoming it's becoming a reality, and
Yes.
that means we are going to be uncompetitive when it comes to that market. We are producing at such a high cost.
Mhm.
Now, so let's face this thing. Don't you think, with the current situation, don't you think the BDCs are a necessary evil? This is why okay, listeners, please, let's take a short break. Let's take a breather, and then we'll come back. We'll discuss some further implications and how this thing affects the wider economy. Please stay with us.
Excellencies, ladies and gentlemen, it now is my very special pleasure and privilege to ask His Royal Majesty, the Sultan of Sokoto, the chairman or chairperson of the leadership group to come forward and join me and hold on to one bit of this cloth so that we can jointly unveil the bigger, better, deeper Levoque.
Money Radio, discussing the business of making and spending money.
So, you're welcome back, listeners. We're talking about the implications of the dearth of foreign exchange on the wider economy. You're welcome back. I remain Case Hammond, your host, and with me in the studio is Mr. Anthony Luko.
Thank you. Welcome back.
Yeah. So we're talking about the Bureau de Change before we went on that short break. The Bureau de Change seemed to be a necessary evil, and I'll explain myself. About 3 weeks ago, I had to make a payment in foreign exchange, and there was a payment portal in the bank I bank with. Of course, filling that form to make that payment, they directed me to a local bank's FOREX, payment portal. And you wouldn't believe, it took me about 2-3 weeks before I was able to make that payment 2-3 weeks ago. It took me about 3 weeks to make that payment. How so? I kept trying and they would say there was an error. I made calls to that bank. I even visited the bank, and they just seemed not to have any reason why my payment was not being accepted. So finally, I was told that the reason is because making such payment, I was entitled to $100 per month.
Yes.
And the amount I was paying was $166. So, in order to make that payment, I had to use a dollar account. You understand?
Mm-hmm.
I had to use a dollar account, which made me to contact somebody who had a dollar account, and I had to pay that person the $166 to make that payment on my behalf. Now, the reason for all of this is CBN's seal.
Yeah.
That is $100 per month for people like me. Okay? I had to go to BDCs to buy that extra amount and pay into this friend's account before my payment is accepted. He paid on my behalf. So, in that case, you can rightly say that, or I can rightly say that the BDCs were a necessary evil for me because I had to go back to them. The same bank, when they explained to me that I couldn't make that payment because of so and so reason, I asked, can I buy dollar? They said, no, we do not sell dollars here. You get the point?
Yeah.
So they were a necessary. But there are many other payments like that, many other payments that people need to make. That you can't just make without buying from the BDCs because the banks are not willing to sell to you.
Yes.
So the BDCs have become a necessary evil.
It depends on what your payment was for. Like the CBN has pointed out, you are eligible to make access foreign exchange for your basic your business travel allowance, or as your personal travel allowance, and you can also get foreign exchange to pay for school fees and then for medicals. So it all depends on if you were making a personal purchase, they are saying that you don't have to, because of the issue, all this having so much dependence on imported products and all that.
But
so if you were making a purchase, it may have been for luxury, and
no, it was my purchase was a necessity. It wasn't luxury. I can assure you, it was necessity. I needed to make that payment. I wouldn't say on why I needed to make that payment, but I needed to make that payment. It was a necessity.
and
So there are many other people who need to make payments that are as necessary as the payment I made.
of
So
course,
because the CBN's limit or the provision they make for foreign exchange does not cover the needs of all Nigerians. That's the fact.
no, this,
That makes the Bureau de Change a necessary evil.
of course, nobody is saying they shouldn't operate. What the CBN is saying is that they should not, that CBN would not sell dollar to them. So if they can source this dollar outside from other sources, they are free to sell to you. And like you said, you went there and you bought. So, but the issue here is the abuse that has come, that they've subjected that segment to, because of they were able to access funds from the CBN. So, but now that is off, and the what is even causing it, like we saw in this report, is the activities of speculators. Already, the speculators are saying, the people there, they've seen that, okay, the BDCs are no longer accessing forex from CBN. So definitely, there's going to be, people are going to need
Look,
so much
I can
dollars.
assure you, if the banks were really giving out the foreign exchange freely, these speculators wouldn't have this field day.
So that
It's
is
an issue
that-
of
that
demand
is-
and supply.
Of course, so that is where we are at now.
Because the dollar
banks-
the dollar is scarce.
So the banks are also afraid, sort of. They are being careful.
Careful about what?
They are careful because their transactions are is scrutinized by the CBN, and they will be penalized for any transaction that is not authorized. So
But
to
you
say,
know that for foreign exchange, if I'm not making a mistake, there is need for foreign exchange to the tune of up to 100 million a day that various stakeholders have. So if you have need, if the country has need for up to $100 million per day, and you are supplying at a slow rate 40 million, there is there's an automatic, there is a ready market, and there is an automatic market for the bureau de change, the black market. That's a given.
of course,
So the thing is, it has certain implications on the wider economy. Like you were saying, manufacturers are complaining about slow, more expensive products,
their products are more expensive,
which has implication for inflation.
for the local consumers,
Production is low.
that can lead to job losses,
Demand is low for their products.
especially for those who are producing for exports.
They are not competitive
They are not
again.
able to compete.
And when demand is low for their products, of course they will
Cut down.
they will cut down their
production.
which means cutting down on staff. Not just that you won't employ people, but you will have to cut down on staff. Once production is cut, you have to cut down on staff, because you can't
Keep all of them on.
Yes.
When the production is
when you
not-
cut down on staff, these especially young people who are in the manufacturing business, will want, they need to eat.
Of course.
They need to take care of their basic needs. And according to a manufacturer who was quoted here, he said that fuels insecurity. And still, that insecurity is like a catch-22 situation, because that insecurity is going to discourage investors. And when it discourages investors, what happens? The economy, people are getting poorer. You know this issue of inflation. Inflation is like a tax, an evil tax. It's an evil tax. Um, my salary was worth a good amount compared to foreign exchange just about the beginning of this year.
Okay.
That my same salary is less, I mean, it's worth very little in comparison to foreign exchange right now. So it makes me poorer. It makes you poorer. It makes everybody else who earns more, their salary or their income in Naira poorer. It makes Nigerians poorer. There has to be something done about this issue. And we know that this inflation is being caused, or majorly being caused by um, of course, forex. But that forex is there are other issues also that are causing it is lack of production.
Of
So
course,
the federal government needs to do something about this forex and poor production.
And yes, this brings us to the issue of economic diversification. That the federal government there has been a lot of lip service on this issue of depending only on oil and having virtually every other thing.
You know what makes me
imported.
angry about this issue of diversification? We hardly talk about economic diversification until the price of oil
goes
drops.
down.
And you journalists also, I blame you.
Are you not you're also a journalist, so you blame yourself as well.
Because usually we talk about it when the price of oil drops,
we begin to sing diversify the economy, diversify. So is actually diversifying the economy so that we can have multiple sources of this foreign exchange.
Not just oil.
Not just oil.
You know, Nigeria's export as of the 70s and 80s made up 90% of the value of Nigeria's export.
Yeah.
Around that time. We are
Right
in
now,
2021. It's the same thing.
Right now, sir, we are having a deficit balance of payment.
You get the point.
Because we are importing so much and we are not exporting to balance it up.
To balance it up. And
so
once this price of oil drops,
it begins to affect everything. Nigeria at this rate shouldn't have issue with foreign exchange. If the different zones, the different segments of the economy we are harnessing their natural resources potentials and then being able to export much more than we are currently doing.
I want to make one or 2 points here. You see, the country right now is not exporting much. This government actually has made good effort to export, especially agricultural products. But somehow, it was in one of our reports a few weeks ago that Nigeria's agricultural products, about 76% of Nigeria's agricultural products are rejected by the EU and the US, and that includes China. And China are rejected, and it's because of the issue of chemicals and we're just talking about the quality of products. So there are arms of government. There are arms of government that need to make sure that quality control is given good attention.
Yeah.
Now,
top priority.
Talking about import also, there are some products that we shouldn't be importing. We import maize, even maize, which constitutes much of the country's, much of the feed of our poultry and other. Yes, we import all of that. We import wheat for flour. The price of bread is going up now because of
import, because of the same foreign exchange.
Because of the same foreign exchange. And you see,
every of these things boils
so
down
we
to
need to produce
exchange.
these things here, and that means we need to stop giving the agriculture sector lip service. at least, since we are not that technologically advanced for the moment, agriculture which we can produce, agricultural products which we can produce, we need to stop giving it lip service.
We need to ramp it up so that at least we produce what we eat.
At
least let's produce what we eat. Let's be food sufficient, and most of the things that are imported to augment what we produce, there wouldn't be need for it.
You know, when I saw a report on,
foreign exchange.
I saw a report not long ago on a website called Trading Economics that in 2019 Nigeria imported $99 million worth of palm oil. You wouldn't believe it.
Of course, that's a discussion for another day because our time is up right now.
All right, listeners, thanks for being with us. Please continue to follow us as we dissect economic issues of Nigeria on a daily basis on Money Radio. Thanks for being here with us today.
Thank you.
Thanks to you, our producers. We say please join us for another bumper edition tomorrow. Be blessed.